Hello and welcome to Bloomberg Quint's IPO Adda. Today we have Shilpa Kumar. She is the MD and CEO of ICICI Securities. That IPO opens for subscription. Ma'am, thank you so much for speaking to Bloomberg Quint. Of course, first of all, I would like to congratulate on a very strong anchor book and the kind of response that you have received. But talking about the core business and the way broking and its competitive landscape has changed, and still you have been able to maintain a sizable position in that industry. If you could tell us more about the business and how really ICICI Securities is gearing up for the competitive landscape and the digital platform for probably boosting your retail and online broking business.
So thank you about the anchor comment, and I just want to share with you that our issue is a little bit different. Most issues normally have QIBs, qualified institutional investors. They are normally a smaller part of the issue. In our case, they are 75% of the issue as per SEBI guidelines, which means that our anchor book, which you saw yesterday, is really 45% of the issue. So that's the first comment, and of course you'll have observed it's a good mix of both DI, FI, long-only investors. Moving on to the company, I think I'd like to address your question in three parts. One is what I see as the macro opportunity. Within that, what's the industry opportunity? And then, of course, how ICICI Securities is kind of going to take advantage of this opportunity. I think from a very fundamental macro perspective, if you look at it, there are two important things happening in the country. I think there's a big transformation of savings from physical to financial. And within that, investors are looking at, alternatives to the traditional form of financial saving, which is fixed return deposits. The second transformation is more and more of India is becoming digital. And therefore, I would say the macro opportunity for, the industry which deals with digital financial savings itself is a, very significant opportunity. So that's the macro landscape. Within that, if you look at the industry, and I'll talk a little bit about the broking industry, you'll see that actually over the years you have seen market share move almost 5 percentage points towards bank brokerages like ourselves. So that's the second part, in terms of industry and how it's working out. The third thing, which I'll now come directly to ICICI Securities, and let me first address the retail piece because it's almost 80% of what we do. What I would like to say is that, ICICI Direct, it's a 17-year-old franchise. It's a business we started in the year 2000. We were pioneers in terms of online investing. And if you ask me, how we have maintained leadership over all these years, because today we are indeed the leader in terms of, active clients, we're leader in terms of brokerage revenue, and we are the second largest non-bank distributor of mutual funds in the country. If you ask me how have we maintained leadership over all these years and through market cycles, I would say, it's because of the company's commitment to actually always innovating and using technology and information to the customers to be at the forefront of delivering financial savings and investment solutions to customers.
Saloni.
Ma'am, as you said, the majority of your revenue comes from the retail broking side. Sure. So ICICI Securities earns about 63% of their revenue from the broking business, right, retail as well as institutional. So what kind of mix are you guys looking for? What is the target mix in terms of segmental revenue that the company is planning for?
Right. So, I'll address it in two ways. One is from a customer's perspective. We started life as a brokerage, so it's our, original business. But over the years, to every retail customer, we offer not just brokerage, but we also offer mutual funds, insurance, fixed deposits, etc. From a business model perspective, what that means is we have seen greater diversification of our revenues away from brokerage into other products. So that's not because of a defocus on brokerage, it's because of greater focus and greater growth in our younger businesses. Which are these younger businesses? Certainly distribution of mutual funds, also wealth management. We've got a 350-member team focused on wealth management. If you look at the institutional space, again, you'll see a combination of businesses where we are leaders and businesses where we are going to continue to grow a little bit more. On the investment banking side, we are leaders in the ECM space. If you look at last 5 years data in terms of IPOs and issues done, we were number one in terms of number of such issues. In institutional broking, which is a second business under investment banking, we have actually grown at 30% in the last 5 years CAGR. If you look at advisory, we believe we can do a lot more, and that's an area which we will focus on. So as you can see, there is younger businesses which will naturally grow more, and that has resulted in our non-brokerage revenues going up 7% in the last 5 years, and directionally, I guess that's what will happen.
Ma'am, one portion comes to the return on equity, which is quite strong for a company like you. But on the valuation side, a couple of brokerages and a couple of people that analysts we speak to say it's on the higher side versus traditional brokerages businesses which are listed. Of course, you have the ICICI Bank parentage, because of which you cannot move too much into the NBFC or other related businesses. But my question would be, moving forward, what could be the growth drivers for the business? Because I was reading some reports which said that the revenue per customer has remained more or less stagnant for last many years. If you look at the broking business also, the revenue growth has not been that great. So given the fact that the valuation that you are asking is quite high, of course that's justified partly because of good return ratios. But if you could tell us that from here on, given the competitive landscape on the online front, on the digital front, how is ICICI Securities positioning itself, and which will be the newer avenues for growth for the company?
Yeah, sure. So, one important thing I'd like to share is, with our listing, I feel we will be a fairly unique name on the listed space in India. Okay. So why unique, I'd like to spend a moment on. Unlike most other firms whom people, typically tend to compare us with, we are very capital light. So if you ask me in one word, what's our business model? We are a pure play on the financial savings trajectory of the country. It's an agency business which makes us capital light, which also means really that every year we have paid out 40 to 60% of our profits, excluding tax, as dividend. So that's the first footprint of ours, which will make us somewhat unique.
And you would like to maintain that?
So of course, see, we haven't given guidance in terms of dividend ratios, but what I can say is indeed we are a capital light business. We don't need much capital. Okay. So that's the first point, which makes us unique. And which also explains, the fact that we are high ROE. This year ROE is 70%. So I'm saying that will give you a sense of the returns on the business. That's the first thing. The second thing is, the opportunity I talked about right at the beginning. I would say that actually the focus on moving savings from physical to financial that we are seeing, and the last year I would say is evidence of this focus. It actually will permeate through every part of what we do. So if you look at the retail part of our business, it will permeate because, and you have seen the macro data on it, over the years, the proportion of equity ADTO has gone up significantly. The mutual fund investments, if you look at it, they have gone up significantly. If you look at, the digital opportunity, you'll see that, mobile transactions have actually gone up by a factor of almost 285. So if you kind of look at the digital financial savings opportunity, I would say that it is a very important and large structural opportunity. And indeed, we will stay focused, on accessing this opportunity. Of course, your next question will be, what about market cycles?
Absolutely.
Yeah, okay.
Yeah, because you have a good ROE, but the P ratio doesn't look cyclical, sure, despite the business being cyclical on the broking front.
No, so let me explain the cyclicality part, how we look at it. So I think to look at the cyclicality of our business, you need to look at ICICI Direct. Now, if you look at ICICI Direct as a platform, it is not just a brokerage platform. We do brokerage, we do mutual funds, we do bonds, we do tax-free, we do taxable, government bonds, corporate bonds, right? So what that means is as market cycles turn, investor will need to look at different instruments. And on one platform with information, with ease of access, efficiency, the customer can do it all on ICICI Direct. And therefore, diversification is important, and I've shown you how our, revenues have diversified over the years. And I just want to add that if you look in our prospectus, we have also disclosed that revenue per customer has increased over the years. I want to leave you with two other data points. One is that, if you look at 40% of our revenue, it has come from customers who have been with us 10 years and more. Okay. And one very last data point, because it illustrates how as young India grows and saves and invests, we grow with them. The data point is that almost 35 to 40% of our clients, retail clients, are 35 years of age and under.
Ma'am, speaking about your distribution business, ICICI Securities has been titled as the second largest non-bank mutual fund distributor in India for financial year 2017. Right. So how do you plan to increase your market share in that space?
Yeah, so I think we are looking at doing that in a variety of means. I think first of all, the fact that as an ICICI brand and as a entity with 200 branches and 75 cities presence, we do hope to acquire new customers. Second is because of our technology identity. We think we can offer a very consistent, high quality service which is diversified to every customer. And this is the beauty of it, as India, in a sense, the Indian retail consumer, whether they are located in Mumbai or located even in the most remote part of India, all they need is data connection and smartphones, which are both becoming increasingly cheaper. And then they have the ability to connect onto ICICI Direct, where they will get exactly the same product offerings as everybody in the country. But we do acknowledge that physical presence is also important, and therefore we are proud of the fact that we have more than 4,600 sub-brokers and IFA partners who also help us to actually reach out to customers across the country.
Thank you so much for speaking to Bloomberg, Quint. So that was the management of ICICI Securities talking about how the physical, savings would move into financial savings for individuals in India, and that could remain a good opportunity for the company moving forward.